Good morning, everyone. Actually, I think we passed 12, so I should say good afternoon. Hope you enjoyed the event so far. I personally learned a lot from the previous panel about blockchain, about its potential, but also about some of the challenges that this technology brings. So now we are moving from theory to practice. So we will have six panelists, six speakers, that will present their project of practical applications of blockchain. They are divided in two groups of 3 speakers each. After each group, there will be a 10 minutes of Q&A session. They will present projects from corporates, startups, as well as a project from the university. So let me introduce, first of all, Maurizio Sironi, who is manager at eFinance Consulting Reply. He will tell us more about the project Crypto Euro. That is a digital currency who try to combine the benefits of cryptocurrencies with the benefits of a more stable physical currency. Maurizio, over to you.
Okay. Thank you, Simona. Thank you, Simona, and thank you, everybody. My name is Maurizio Sironi, and I am the blockchain practice leader in Reply. And I will spend the next minutes introducing you our research project called Crypto Euro. So we will speak about cryptocurrency, about payments. So there are a lot of well-known features about cryptocurrency. Some of them have already been explained in the previous panel. I will go very briefly through it. First of all, as we know, the cryptocurrency, Bitcoin, for example, is a decentralized and peer-to-peer money, and that's a reason why a lot of people like Bitcoin. But it also has some drawbacks. So basically, no monetary policy, and that's something the central banks doesn't like at all because they can't push or slow down the economy. And as we know, Bitcoin has a high volatility. That's good for short-term investment, but it's not good for payments at all. And the regulation, there is almost no regulations or fragmentary regulations between one country and the other. And there is still low accessibility to cryptocurrency. It's quite difficult to buy and spend cryptocurrency. And these are all drawbacks that doesn't allow to use Bitcoin, for example, for payments, for buy goods and so on. But there are also, if we look at cryptocurrency, there are also some features, innovative features, that are very, very useful for payments, but that almost nobody talks about. And I'm talking about, for example, programmable money. In the cryptocurrency, using cryptocurrency, you can put rules on the currency itself. For example, I can transfer 1 Bitcoin to you, and I write on the transaction itself that you can spend that Bitcoin just for this and not for that scope. Or otherwise, pre-transaction. With the cryptocurrency, I can transfer some money to 2 or more people with 1 single payment. That's something it's not doable with a standard payment system. If I want to transfer money to 2 or more people, I have to perform 2 or more payments. And in the everyday life, each time we perform a payment, we at least pay a couple of actors. The vendor and we pay taxes, for example. So the split transaction, it's very useful for paying directly taxes. And last but not least, another superpower of the cryptocurrency is the auditability. So the transaction data, transaction information can be accessible by everyone or just by an auditor if you don't want that everybody look at the transactions. So the idea behind this research project is to merge all the innovative features brought in by the cryptocurrency with the well-established features, benefits, of the euro, the common euro as we know it. So highly programmable transactional protocol from the cryptocurrency, but a bank issued and regulated money. So the high transparency guaranteed by a ledger distribution, but with a stable value, pegged one-to-one with euro. So 1 crypto euro is equal to 1 euro. This thing is called crypto euro. And that could be very useful, but it's of course not just our idea, it's not a reply idea. Fortunately, a lot of central banks already recognize the innovative features of the cryptocurrency, and so they started a lot of research projects, and in some cases some implementing and adopting projects for an official cryptocurrency. Of course, we are not a central bank, so our project doesn't look at how we can introduce a crypto euro in Italy or in Europe, how we can create a crypto euro, so which is the technology for that, private or public technology. We don't care about the governance issue, about the dynamics for generating money. But we just want to identify and estimate and quantify the benefits of using the crypto euro for some vertical process in major industry. The project members of this project are, of course, Reply as a promoter of the project, but also it's a joint project with the Polytechnic of Milan for the research activities and for the quantitative modeling of the benefit, and the APSP, the Association of Payment Service Provider, which is the knowledge of payment processes. We already started looking at three main industries: insurance, energy, banking, involving some players from these industries, and with them trying to identify and quantify the benefits for using crypto euro in some processes. That's what we are doing, and we are pretty confident to publish the first results in the next months. But since we are speaking about social goods, I think that combining programmable money, split transaction, and auditability, that could improve also a lot of mechanisms also in social good. For example, if we think about the social card, a government can give 500 euro to some people, but just for buying food or just for buying transportation or culture events. And that's written in the protocol, in the cryptocurrency itself. You don't need another layer on top of the payment status. Charity program. If I give some money, I'm sure that the money goes to the actor or to the people it's intended to go. Or public funding, for example, I'm sure that that scope can be more than improved using this kind of features brought in by the cryptocurrency. These are just ideas, but there are a lot of other applications, because cryptocurrency is very powerful if you look at behind the commonly known features, so just price and decentralization. That was all. I think the time is over, so thanks.
Thank you, Fabrizio. Maurizio. So now we have Savino D'Amico, Head of Digital Payments and Biometrics at the Innovation Center at Intesa San Paolo. He will talk about the approach of Intesa with blockchain, and specifically about some experimentation that they did inside the corporate. Over to you.
Yeah, thank you very much. Really, we have little time today, so I just want to go straight to the point. So, as we said, we have 2 points here. First of all, I would like to underline that as Intesa San Paolo, unfortunately, it's not so clear at all, but never mind, no problem. I want to say that we have experimented really very much the blockchain in the all senses, in all meanings. So both the so-called public blockchain, that of Bitcoin, and that of the permissioned so-called blockchain, the private blockchain. Within the public blockchain, we made a number of proof of concept, a number of studies, and we share what has been said before about the current limits of the public blockchain. So first of all, the scalability, and if someone tried to make some transaction this weekend, a bad experience because there were too many transactions, and so the blockchain more or less didn't work. The problem of privacy, let's think about the fact that a bank must be in a position to make it private, the information relevant to its customer. First of all, the other very important point is the traceability. In the previous sessions, something has been said about the public blockchain. You have to say that it's very easy to make completely anonymous the transaction. So for banks, this is really a problem. Here, there is another quadrant. We have made a number of internal experiments about two main points. One is the Dodd-Frank Act, that is the use case I'm going to speak later. The other one is relevant to the smart authentication. We use, in this case, internally the public blockchain in order to reach some objective. In the first case, and they are going to see that, in order to comply with a rule, with the Dodd-Frank Act rule. In the second case, in order to make it more secure, the authentication of our IT officer that authorize the live production of new software. So we are really using, in this case, public blockchain internally. The last quadrant, that is not really very clear, but I'm going to explain, is relevant to permission blockchain. So we are talking about an environment where only institutions that are authorized can work together. And in that area, I refer specifically to the R3 formerly consortium. Now is a real company. Then we are shareholder of R3. It is a very important, let's say, platform, because on that we can work with about 100 very important institutions where we experiment many business areas like cross-border payments, trade services, capital markets, and so on. So let's say the typical areas. Why banks are going on private blockchain? Basically because currently we are facing those problems, so the problems relevant to scalability, to privacy, to traceability of the public blockchain. So currently for us it's very important to find a way to be in a position to be compliant with regulators, with laws and rules set by regulators. And exactly for that, I'm going to explain a use case we experimented internally again. So I refer to what it was said before about the great importance and the great features coming from the blockchain. So the auditability and the immutability. What we did, we make the hash of the operational day of a certain database. Having the hash, it's a strong, a very short string of characters that is unique. And so anyone, for example, a regulator, can verify that after a certain period of time, what we have written on the blockchain has not been changed. No? which is the rule. The rule coming from the Dodd-Frank Act is requesting the swap dealers, but let's say a bank in this case, to maintain the records in a not rewritable, not erasable format. So data must not be modified. And this is, as you have heard before, one of the most important features of the blockchain. So for us, it was really very easy to think about using public blockchain in order to be compliant with this rule. Just to be very, very short, as we are short in time, our IT and compliance officers find it useful, find it effective and efficient, this tool. We are also studying other possible use cases where you can use this kind of experiment. And, but we are using this tool together with, let's say, the standard way we comply with the rules, because currently this kind of way is not accepted by regulators. In fact, between the way forward, you find that we are going to, we would like to require to regulators to allow people, banks and financial institutions to use blockchain in order to comply with all those cases where banks and financial institutions are required to not modify data, so to prove that data have not been modified. We are also starting analysis in order to find other use cases, but there are really many, because if you think about the public, for example, the public land registry, no? It could be another way out from the banking and financial area where this kind of experiment could be used. And, but we want also to identify and make analysis of how we can use a different ledger, not a public ledger, especially with other banks, for example, within R3, as I said before, in order to get the same result. And it is clearly very possible because within a public domain, it's important to use the public blockchain because there is no trust. But if we are within a permission environment, it's, frankly speaking, it's very easy. It is very useful to use also a private, permission distributed ledger in order to reach the same objective. There is also a change in the Dodd-Frank Act. We are analyzing it, but we are also quite sure that we don't have to change very much in order to be compliant also with this different way of rule about always about the same business area. That's all.
Thank you. Thank you, Savino. So now let me welcome on stage Alessandro Lombardi, Digital Transformation Advisor at Microsoft. He will explain us the Microsoft open approach to blockchain, bringing an example, a concrete example of blockchain application.
Thanks. Hi, everybody. So I'm Alessandro Lombardi. I work for Microsoft Consulting segment, and I'm a digital advisor. Transformation is the most important word here. And the project I am about to talk to you today is, unfortunately, I cannot say the name of the customer, but it's one of the 5 most important projects Microsoft worldwide is carrying on right now. And it's about food provenance. So let me start out of the blue with this picture. This picture is about an event that happened in Sweden when they decided to change the circulation on the road. And why I'm showing you this? Because this is just a very simple example of how the transformation can be hard to sustain and to handle, because that day it was a mess to understand the new direction. So thanks to the previous panel, we have seen that we have just touched the tip of the iceberg. We have a lot of problems to solve. And so the hype here is not that much about the disruption or the change for the sake of the hype itself. It's more about knowing the challenges that we have. And when I say we, I mean as individual, as a company, as institution, and we as a vendor, as a tech company, one of the biggest, as the role, and I would like to say the responsibility to try to help things happen in this sense. So with this challenge in mind, okay. So blockchain for the value chain, what is really, really important in order to achieve some result? It's important to consider the ecosystem that you need to create in order to obtain your result. You need to have an open approach, and you have to be prepared to work with an ecosystem of partners. So when I say partner, I say we as a company itself, our customer, the consortium of partners we are going to lead. And also, we are trying as a company to build a platform in order to build this. Today, thanks to the first panel, we discussed how many things are going to change in terms of architecture, of challenges. There are a lot of layers that are differently, moving from the distributed ledger to the various consensus algorithms that we briefly touched, and then over. Imagine what will happen in the future when so many different protocols and technology will need to cope all together. If we are not able to sustain this change, we cannot obtain the value. Now, value chain is something that is really important in the commercial field. I need to have some value from we as a customer when you buy something, until this value is collected by everyone across the value chain. But the value chain, in this case, is backed by a function in all the companies with the supply chain. And the supply chain is basically, let me simplify a lot, it's a cross-organizational workflow where you need to attest everything that is happening across this workflow. And in this real case, so basically what we did is to start to understand how every participant of this consortium could start by using the blockchain. In this case, just for the record, we are talking about Ethereum and implementation of distributed application on Ethereum. How the changes that are happening while things and products are stored in warehouse, are shipped, and finally arrive at distributor and final consumer are tracked. Naturally, I'm oversimplifying this because it's a really, really a tough problem to solve, because you can have a value chain that can be short, a value chain that can be very long. It depends on how many things you are transforming across the chain. But at the very end, I want to go back to the terms of value. We are saying value this time with the focus on the value for people, so for society, because after all, any kind of food that are having. So I want to recall the slide that was about the benefit for customer, yeah, and the benefit for people, or for society. In that case, we are really focused on the benefit for final people, so the value that we can bring to everyone. Because after all, even if we are tracking everything, as someone before told, it's not just to track everything for the sake of tracking. It's just to empowering transparency by means of the smart contracts, who basically is code that can run on the blockchain. And this information can at the very end help in having a sort of tracking and security about the food provenance, but also about our raw material and everything happened across the chain, so that it can be certified. Things, for example, to who is working on that. And everyone who is working on the value chain is people also who is involved in a process, and having transparency on that is also important. So when we are thinking to food provenance, it's not only about the food and the raw material, but also what is, who has worked on that chain. So at the very end, we have a mission as a company. We really believe that. And just to conclude, in the case of Sweden, after all, nobody died for that kind of change. So we need to be skeptic, realistic, and start this journey that has just begun. That's all. Thank you.
Sì, veramente
Thank you so
pessimo.
much.
Cioè, infatti a me poi dava anche fastidio perché
Perché sei dietro le casse.
So we now have a Q&A session, so I'm sure the audience will have a lot of things to ask you. If you have a question, please stand, say your name, say your company, and shortly say the question. Any questions from the audience? Okay, so I have a question. So blockchain is a quite complex infrastructure, and I'm wondering, in your experience, how corporates are ready to talk about this topic, and specifically in terms of social good. When you had to introduce this new concept inside your organization or with your clients, when you talk about it, are they ready about it, or is it something new? And if you have any suggestion or tips for any corporate who would like to start working in using it.
I will take it. So basically, when you use a new technology, you can have an use of this technology that is to enhance something or to disrupt or have a real innovation. Okay, we have the full range of changes in there. Obtaining some result for social good is more usually on the toughest part, and in general, according to our experience, most companies are just starting this journey. So the good thing is that there is really a lot of interest on any kind of person profile, regardless of roles and position in companies and institutions, and this is very good. We are in the middle of the hype, but again, the maturity level is really low. If we are going to target at something that is really ambitious, we talked about sovereign identity before. So we also are committed as Microsoft with other important company for ID 2020 about experimenting this kind of technology. And this is clearly something that even the most capitalized company in the world, even if you pick 3 of them, cannot do alone. So this is why it's really important to have this concept of working all together in order to achieve some result. Clearly, we are doing also for business purposes, but you have to work with a completely different mindset. And this, I can guarantee, it's something that I'm seeing happening right now. So at least this is encouraging.
Yeah, I can confirm that. I'm talking about blockchain since 2014. At the beginning, the companies, the corporates were not so, let me say, prepared to speak about blockchain. Nowadays, they are more, they have more knowledge about blockchain. The problem is that a lot of corporate, a lot of look at how to use blockchain, thinking about their standard and current processes. So in order to put efficiency, using blockchain to put efficiency on their current process, current products, current services. But blockchain can be used also to disrupt them. So you need to think to new products, new business model, and something like that. That's quite a difficult thing for an incumbent, let me say. It's more easier for a startup, for example.
Well, our experience is that really over the last, I think, 3 years, we have been a great improvement, at least within the financial sector, because clearly for us it's more easier to to see what is happening there. And we have been passed from a certain period where people were only studying the technology to a moment where someone were experimenting it in so-called proof of concept, so something that is not connected and integrated into the IT system of financial institutions, but it is used only to understand how the technology works. And now we are approaching the next level. The next level is the pilot phase. So it's a phase where the processes are integrated with the IT system of financial institutions, but the improvement is limited in the number of people involved. No? So this moment will be very, very likely between 2018, 2019 for financial institutions. So I would expect that in really industrial implementation at banking level, at financial level, can be envisaged about 2020. Because really you have to think about that this kind of business, these kinds of technology, need of a network effect. If I, as Intesa Sanpaolo, even though I represent a big company, I have not the critical mass in order to make it economical. So the adoptions must be absolutely widespread at the level of industry, not only at the level only of financial industry. In fact, we are also working with other different companies from different industries in order to find a way to exploit in the better way this technology. But we are at an early stage in this case.
Okay. Are there any questions? Yeah. There's one here.
Thank you. I'm Jarmil. I'll talk later. My question to you is about the fact that permission blockchains are in use in some companies. So why all these companies that we have been seeing, this like sort of corporate approach, uses a permission blockchain and not just a distributed database? When it's permissioned, then you can just like host several copies of that data and hope that people trust you as a company. I think blockchains exist really because people don't trust you as a company, so they want to have a blockchain that is permissionless. So please.
It's a way. Well, I think that digital ledger. In this case, we talk about digital ledger technology. So let's say a sort of mix between the pure public blockchain, that of Bitcoin, and the centralized system. No? As I said before, but I had a little time before, currently the public blockchain has, in an objective way, different problems. You know that scalability is a problem. We are talking about 3, 5, 7 transactions per second. The traditional payment systems are able to manage about 1,000, 10,000 of transactions per second. This is really a great problem. The second is the privacy. You know that if I send a Bitcoin to you, the amount is public, addresses are not public, but in some way, in some cases, you can reconstruct the identity of the people involved. The other very important point for banks is the traceability. For anti-money laundering and anti-terrorism reasons, we have to be in a position to report to our regulators all the information exchange end-to-end from the ordering party to beneficial party. So public blockchain can't be used. We think that there is a possibility to be more efficient in using, let's say, a mix of public and not public blockchain and permission blockchain. Because we think that some of the costs can be distributed. For example, we can save a lot of memory because many data cannot can be sent, exchanged between financial institutions, but can be stored in permissioned ledgers. We have to demonstrate it because we don't have currently an application running for that, but we are quite sure that we can get the point.
Can I give my part of answer? Maybe if we are talking about private blockchain, I totally agree with you, because in that case we are completely going against the concept. So it's not what it was meant for at the very beginning. It was quite an anarchy approach, and that's totally fine. When you talk about permissioned blockchain, we are talking about having a quite large group, because also having a small group does not make sense, that can share and nobody can have can preempt others, so nobody can control the others, and at the same time you can be open to accept, for instance, institutional auditors on that. Think to a consortium of transportation players or producer of any good that can be audited in their process, because an institution can, or any association can be a node in that consortium. So it's a completely open approach. And in any case, this doesn't mean that a public blockchain is not a solution. It can be. It depends case by case.